Welcome to another episode of Bank It or Tank It. I'm Chad Shoop, and today we're going to dive into a stock that actually two of you all recommended. We got a recommendation from Jay and Derek to take a look at the stock called the Trade Desk, ticker TTD. So that's going to be our stock that we're running through for our Bank It or Tank It today. And if you're new to the Bank It or Tank It series, and if this is one of the first ones that you're checking out, I just want to let you know that basically all we're going to do is run through three key areas for the company: the fundamentals, the sentiment, and the technicals, to determine an ultimate price target and whether or not we're going to bank on this stock or tank it over the next 12 months. And then that price target will be what we're looking for the stock to do over those 12 months. So today, the stock that we're going to be analyzing is the Trade Desk. And before I dive into all of the details on the Trade Desk, scroll right below this video and hit subscribe so that way you'll keep up with all of my latest Bank It or Tank It videos. And also you can click the like button if you enjoy the content that I'm sharing with you. And don't forget to leave me a comment below. Again, every week this year, I'm going to be going through what stock that you all recommended. So we're going to be talking about stocks that are just on your radar, stocks that are either in your portfolio or you want me to dive deeper into. So just leave me a comment below and I'll be sure to use those in upcoming Bank It or Tank It videos. And also I want to keep this conversation going on Twitter. So use the hashtags Bank It or Tank It or the long hashtag Bank It or Tank It, and follow me on Twitter at ChadShoopGuru. So jump on Twitter, follow me, because I want to keep this conversation going on Twitter as well, with the idea that this Bank It or Tank It series that I'm doing is really just the start of your research, of your insights into these companies. And this is really just at the high level that we want to figure out whether or not this is a stock that we want to bank on or tank over the next 12 months. And if it is, then from that point, you know how to trade it, you know the key levels, and I'm going to be keeping you updated on Twitter about when stocks hit those key levels to maybe create opportunities to either jump in and buy call options or put options, or just short-term trade opportunities for buying and holding the stock for just a few months. So be sure to follow me on Twitter. I'll be keeping notes on all of these companies and all the key levels that I highlight on these charts about what to expect next for the companies that I've already done, and also about some companies that maybe you've left in the comment section, but I haven't had a chance yet to do a full Bank It or Tank It on. So be sure to check those out on Twitter. Follow me at ChadShoopGuru. Now for today, we're going to be diving into the Trade Desk. And this is an exciting company because they're really in the background of kind of this technological revolution. And what I've done today is I've actually reached out to one of my colleagues, Anthony Planis, and asked him if he could do a fundamental analysis on the company. Because as most of you know by now, I'm not really the fundamental guy. I like numbers and I love studying the stocks, but ultimately to me, it's the price chart is the key factor. So that's really where I spend most of my time. We run through a fundamental analysis, but it's very brief and very high level. So he's going to dive down deeper, a bit more into what the Trade Desk does, fundamentally speaking, and also looking a little bit more long term. But for us today, we're still going to hit on our fundamentals, and his may just be a little bit different. But I wanted him to review the fundamentals of the company just to give you some added insights on a stock. So when you're done with this video, scroll below and be sure to check out his video. It'll be right below. You usually have to click read more to get the expanded section below this video. And then in there, it'll have a link to Anthony Planis' video on the Trade Desk. Now, when you look at the company, they're in the background of basically every website that you look at least the ones that they partner with, because what they're helping run on those websites are the ads. And they're not really creating and putting the ads in. They do a lot of stuff for these ads, but their main focus is being basically a trader for people that are looking to buy ads and sell ads. So they're kind of that middleman connecting these people in the milliseconds that it takes for you to click on a website. They know all the data that they can run through to figure out whether or not this is an ad that should be placed here or wherever on the website. And they run all those analytics for people that are looking to buy ads. So that way they know the best place to spend to put their ads in front of you, where they're going to get the most clicks. And then for the sellers, they want to guarantee that they'll see the most relevant content on their website. So as a whole, this company is really in the background of this mega space that is going to be ad spending online. Because this is a major funnel of basically this technological revolution that we're going through. With everything going online, and that's not just browsing the internet, but it's streaming, it's YouTube, it's streaming on your TV, is on your iPads. We're going to see a lot more of this content kind of fall back into ad-based content. Right now, we know how the streaming networks are going. You pay for a streaming bundle for Netflix, and then you pay it through Apple TV Plus, you pay Disney Plus, you pay HBO, but eventually these are all getting so high that some are going to also going back to start offering ad-based networks. And the Trade Desk is really the push behind that to help make sure that the people that are buying ads and selling ads are meeting both of their goals. The people that are selling it are getting the money that they want for those ads, and the people that are buying it are getting the most for their money. And these are companies that are trying to sell you things by placing the ads. So they're buying the ad placement and they're trying to show you important things. So they can do this through TVs, they can do through the internet, on your mobile phones, basically anywhere that you're looking at a screen. And they also do it on radio and other platforms as well. But anywhere that you can be served up an ad, the Trade Desk is working to completely re-innovate that process to where everybody's going to end up winning, including us as the consumers, because the types of ads and the content that we're going to be seeing is going to be way more relevant and timely to our personal life. So that's the kind of my overview for the Trade Desk. But be sure to check out Anthony's video because he's going to dive deeper into what they do and how it's going to make them money in the future. So now let's jump into our bank or tank it analysis today. And we start with the fundamentals. So let's look at a few key stats for the Trade Desk. Now with our key stats, we always look at the total revenue. That's going to be the blue bars on the chart. And then the net income is the burgundy line going across the chart. Now the bars, the key for that is on the right side so you can keep up. And then the net income key is on the left side so you can see how these are trending over time. And you'll notice that both of them start around 0 in 2015, but they start positive. So this is a relatively new company. They've only been public since 2016, but being a young tech company in the ad business, they really found a way to at least create profitability here. Again, the net income is kind of the bottom line, and they start with small profits over these first few years. But in 2019, they're making a pretty big jump here on the expectations for the full year, which are not finalized yet. Their earnings are actually coming up later this week, and that's going to be an excellent opportunity to be trading this stock, by the way, because it's going to create a lot of opportunities before and after the earnings event that you can capitalize on. And we'll talk a little bit more about that once we get to the price target, but you can see that the expectations are pretty high for this quarter to bring the full 12 months for 2019 up to this key level and then continue to trend higher in 2020 and 2021. And what I like to see, though, is that the slope of these lines for the net income and for the revenues are pretty consistent. The type of growth that they've seen since from 2015 to 2019 is almost expected to just be continued for 2020, 2021. And those are the types of companies that I like to look at, because when you see ones that are trying to turn things around or that they're going to start falling off here at the top, then that's where expectations are not lining up with what the company has been doing. And that's where you have a lot of question marks and a lot of uncertainty. So what we're seeing here is very bullish for the company and a very positive view from the fundamental standpoint. So now let's flip over and look at a few key competitors for the company. And we're doing this briefly just because it gives us an idea of the types of competitors that are out there. Again, they're in the ad industry and there's not too many clear competitors. Here it pulls up Facebook, Alphabet, and Adobe. Now, Adobe, I'm not even really sure how they are a key competitor. I don't know what their ad platform is at the moment. I know that they probably spend a lot of time on graphics and trying to get people to use their platforms to help create some of the ads, but I'm not sure where they are as far as the placement of the ads and how that goes. But we know Facebook and Google, these are two very interesting companies because from a consumer's perspective, they're completely free. Everything I do on Google is completely free, and everything that you do on Facebook is completely free, but yet they're using ads to make money. So that's their key platform, their key source of growth. And now the Trade Desk, they don't necessarily have this platform like Facebook, but all they're doing is trying to make this ad placement process smoother from buyers to sellers and more transparent outside of, let's say, Facebook, where they have a ton of metrics and a ton of ad targeting as far as what's going on there, but then they don't necessarily reveal to other competitors like Google or on YouTube the types of ads that you're seeing, the types of ads that you like. So these are all companies that are kind of working in their different little funnels. Meanwhile, the Trade Desk is trying to come along and merge all this data that they have access to help give it a more transparent process to the buyers that are trying to look to find these ad placements. And as we run through these numbers real quick, you can just see that the market cap, they're a relatively small company, just 13 billion compared to Facebook, which is about 600 billion, Alphabet, which is Google, at 1 trillion. So these are giant companies. And then when you go to the short interest as a percent of shares outstanding, the Trade Desk is pretty high, 12.4%. And again, it's a relatively new company, just IPO'd in 2016. So you'd expect volatility early on, but since the stock has really shot up, and you'll see that in the price chart, it's understanding that there's a lot of people expecting shares the pullback in that short interest would be as high as it is at this time. And when you look at the price to earnings ratio, that's 148.5. So it's extremely high, especially compared to Facebook and Google, who are finally turning a profit and showing that they're not priced incredibly high based on the earnings that they are currently generating, just 32 and 30 times earnings. But here, the trade desk, 148 times earnings. So that can seem a little alarming, and it is definitely high, but it's based on those expectations that growth is going to continue. And then when we flip over to the look at their revenues and net income, the compound annual growth rate over the last 3 years, you can see that the trade desk is absolutely crushing it, up 51% on average for the 3 years for revenues and up 82% for net income. That's average annual growth rate per year. So they're just really surging in growth right now, and that's why they can create this high price to earnings ratio that we see, because each year it's just really going to kind of get trimmed lower and lower as long as price isn't getting out of hand. And one of the things that we noticed when we were looking at the net income is that this 12 months for 2019, this quarter that's about to be announced later this week, is expected to see earnings take another jump up. So once that is announced, this price to earnings ratio will level off a little bit, and that's what the investors are banking on. So we'll have to take a look at the earnings later this week and see if that lines up with these expectations. And I always like to take a look at what the analyst recommendations are for these companies. And for the trade desk, it's rated to outperform 2.06 on a scale from 1 being a buy, 5 being a sell. This is out of about 16 analysts that the S&P Capital IQ platform that we use tracks covering the stock. So this is a very strong rating for the company, even though when you look at the price chart, it's on a tear, it's at all-time highs, and the stock has just ran up massively over the last 2 years. But clearly they still have bullish sentiment. It's rated an outperform. So let's now jump over to the charts, which are my favorite part, and see what this price chart is telling us. All right, so here's our price chart on the trade desk. Right now I have it zoomed all the way out. This is from the moment they IPO'd in 2016 to present day. So you can see that it really started at an extremely low level relative to where the stock is currently trading. We're around $300 per share at the moment. But when it IPO'd back in September of 2016, it was at just $30 a share. So we're up over 10 times that amount in just over 3 years. So it's an enormous run for the stock. And now it's starting to get interesting, as you can see what I have highlighted on this chart. So we'll start with the 200-day moving average. That's in yellow. And we use this more so as a sentiment indicator. It also helps to pick the trend. But for a sentiment, we just like to see the price above the 200-day moving average, and then the 200-day moving average trending higher. So we can see it's sloping higher. The price is definitely above the 200-day moving average. So this is a bullish sentiment reading for the stock. It means investors are excited about the company still. And you can see that it's been climbing for years now, and it's held consistently above the 200-day moving average. It had a brief period here a few months ago that actually dipped below the 200-day moving average, but then it quickly got back above that and set new highs. So that was great to see for the stock. Now, the two key levels that we want to track are this resistance level and then this green line in support. So the red resistance and the green support, they make this trend channel that the stock's now stuck in, and that's going to be the key to watch. And what we're looking for is at the very least the stock to stay in between this channel and continue to go higher. Once it breaks below the green support line, then we know shares are going to roll over and take a sharp drop lower. And once it breaks above this red resistance line, then it's a bullish breakout and the stock's going to surge higher. So those are the two key levels to watch as we go forward. And it's a nice forming channel because of the slopes are basically the same. So it's not too tight and the slope of the channel is not too steep based on how the stock has been trading. It looks like it could really be stuck in this channel for the next 12 months, to be honest. But we'll get a little bit deeper into that when we look at the price target. But the other key area to watch is this dotted red resistance line. This was the previous top here back in July 2019. It was a major peak because it rolled over, went back below the 200-day moving average before it found a support, turned higher, and it got back above that, which was great to see. At this point, it's setting all-time new highs, closing highs, and that's always a bullish sign, but it doesn't necessarily mean that it's bullish right away. A lot of people try to trade new highs as a immediate bullish indicator, and sometimes you'll get the push, the surge, that's a clear breakout, but oftentimes you get this little bit of a pullback here. And this one just lasted about less than a month, so it's a very short-term pullback, but that's why we're also hitting resistance here. briefly, and I think we're going to see another bit of a pullback back down into this level. We could also see it kind of consolidate in between about $320 and $280 a share and just kind of bounce around in this pattern before it eventually either breaks this dotted resistance line or a resistance level that's going to be around 320. So if it's stuck inside of that channel, then we'll be looking for a breakout of there. But for now, these are our key areas to watch. The main trends are the red resistance and green support, the solid green and red lines on this chart. The dotted resistance line is just something to keep in mind. Maybe a short-term pullback to this level is something that we can expect. But overall, it's great to see that the price of the stock and these clear trends are pointing higher. It's setting new all-time highs. It's setting higher lows along this trend. So it's a very bullish sign from the stock on its price chart. Now we're ready to get to my checklist for the trade desk. We'll start with the fundamentals. When we check those out, the net income and revenues were both trending higher, basically the same expectations they have been since 2015 and 2019. That projected forward is basically all we were looking at. So that's a very bullish projection. So it's going to get a check mark for the fundamentals today. But again, be sure to check out Anthony's video. He took a deeper dive into the trade desk, especially the fundamentals. So be sure to check out his video. There'll be a link right below this video for you to go over to his page and check out that video to get the complete look for the trade desk on the fundamentals. Now, when we looked at the sentiment, the analyst ratings were bullish. They had a rated outperform. The stock was above its 200-day moving average. So that was bullish. So it's going to get a check mark for the sentiment too. And we just finished the price chart, the technicals for the stock. And I told you that the trends were all pointing higher. So that was a bullish indicator as well. So it's going to get 3 check marks today on all 3 of my key areas that we take a look at. And that means that the trade desk is going to easily end up on our bank it list for today. All right, so before we jump back into the price chart to get my price target over the next 12 months, just want to remind you to go right below this video, click subscribe if you haven't yet, so that way you don't miss out on any of my bank it or tank it videos. Be sure to click the like button if you enjoy the content that I'm sharing with you, just to let me know. And don't forget to leave me a comment. Let me know what you think about these videos, but more importantly, leave me a comment about a stock that you want me to run through my bank it or tank it analysis on. And check me out on Twitter at ChadShoopGuru. I'm going to be posting a lot about bank it or tank it using those hashtags. And I want you to join the conversation as well. So you can leave me comments on Twitter. Let me know what stocks you want me to take a look at. Let me know what stocks you're banking or tanking in 2020 as well. And I'll also give you my 2 cents on those stocks. So just be sure to join in the conversation on Twitter. So now let's jump back into the price chart to get our price target for the trade desk today. All right, now I showed you the key trends to watch, and those are still going to be the main levels that you're going to keep in mind. The red resistance line on the chart is going to be critical, and the green support are still going to be 2 areas that we focus on highly. But you can see that this red dotted line I expect to be a short-term support area. I think we'll see this pullback over the next few days, maybe even, or if not, maybe the next month. Pullback, test this level, then we get a rally out of that. I don't know if it'll get high enough to test this rising resistance level, or if it'll just create a resistance around $320 a share, and then we'll trend back lower. And I think this will take out this previous low just because it's trying to find new support, but I think that's going to come in around the 200-day moving average. So if we extended this up, that's where I expect this support to catch the stock, and that's going to be the beginning of the next major push that's going to send the stock on its way to my price target of $420 a share over the next 12 months. And with the stock currently trading at around $305 a share, we're talking about a $115 price move over the next 12 months. And that's looking at about a 37% gain from where the stock is today. But you can see we're going to get pullbacks. That's going to be even a more significant gain, closer to a 50% gain if it really pulls back and hits this 200-day moving average before it surges off towards $420. And even this surge, it's not going to be straight up. It's going to hit a little bit of resistance, a chop around this resistance level before it breaks out and continues to push higher. But these are the key areas to watch, and this is the key trend that we want to keep in mind as long as we're keeping the stock on our bank it list. And now, just a quick side note about trading stocks when you understand the overall trend. Now, we know these key areas to watch, but within this trend, as long as I'm bullish and expecting the stock to break out above this resistance level and to continue to go higher, I don't want to trade these short-term downside moves that I have on the price chart, because they could not be as played out as I would expect. So this first one, maybe it doesn't come all the way down here to give you that second opportunity to buy it, but also maybe it doesn't happen at all. Maybe we get the breakout earlier than I expected. This I'm probably looking at about 4 to 6 months away before we get the breakout above this red resistance line. So you can ignore the dates on the bottom here. It only goes out just a few months to June, so I can't expand the chart all the way out 12 months and lay it out in that way. So all this is going to be happening on a much longer term scale, so keep that in mind. But also, just if you're looking at trading this in the short term, the patterns that you want to trade are the patterns that are going with your trend until your trend changes. So right now, this is a stock that's on our bank it list, so we would only be interested in jumping in on some of these upwards price moves. So the first one is we're looking for a pullback to around $280 a share. And then that to me would be an excellent opportunity to buy for the stock to go higher. And if we get a break above this red resistance line on the price chart at any point over the next 12 months, that's going to also be an indication that you should be buying this stock at that point to benefit from shares to continue to go higher. Well, now you got my price target for the trade desk. That's ticker TTD. So we're looking at a $420 price target. And no, that's not some random number that we're pulling out like Elon Musk did, even though his stock left that number in the dust with Tesla going off the charts over the last few weeks. But $420 is our price target based on the expectations from the chart, and seeing about a 37% price move from where the stock's currently trading today. So that's what we're looking at for the stock to do over the next 12 months. But just keep in mind over the short-term moves, we want to play towards our strengths, which we're expecting this stock to be a bank it stock. So we want to buy the upswings in this company, and that's how we're going to be trading it as we go forward. So just want to have a big shout out to Jay and Derek. Thanks for writing in, recommending the stock in the comments. Be sure to leave more comments below. Let me know what stocks you want me to take a look at. Follow me on Twitter at ChadShootGuru. So thanks for tuning in today. I'll see you next week with a brand new Bank It or Tank It video. Until next time, I'm Chad Shoot.